The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Sprott Symposium, and I'm thrilled to have Rick Rule with us. He is the chairman of Sprott USA. It's great to have you here again, Rick.
Always a pleasure, Vanessa. Thank you.
Now, Rick, when we last spoke, I really get the sense that you're passionate about finding overlooked opportunities. How do you go about finding the next big thing?
One of the interesting things about the resource business is if you've been in it long enough, history repeats, and so there are ongoing themes. What is unpopular is underpriced. Commodities that are priced below production cost are set for price rises. So we look for things that are needed by mankind but are hated. Stuff that people are either hostile to or at least bored of.
Okay.
It's the past that teaches us what the future will become.
And do you see that as a form of value investing or more being a contrarian?
Both. I don't think that one can be a true value investor without being a contrarian. You don't need to set yourself up to be unpopular. But the truth is that prices are low for things that other people don't want to compete with you to buy. Warren Buffett famously says that he became rich by being brave when others were afraid and afraid when others are brave. And he also said you buy straw hats in winter. Both of those are appropriate both to contrarian investing and value investing.
Right, so now people shouldn't be fearful.
A market like the TSXV that's off by 75%, while that's distressing, is arithmetically 75% less risky and 75% more attractive.
Right. Now, how do you walk us through how you personally find a new mining company to invest in? Let's say there's a lot of companies here. You walk through, how do you find that?
If the question involves an exploration company rather than a nascent producer, it begins with people. What you find is that Pareto's law holds true. 20% of the population generates 80% of the utility, and 20% of that 20% generates 80% of the 80, which is a fancy way of saying that 4% of the population generates 65% of the wealth.
Right.
You stick with proven producers, and you stick with people who have previous expertise in a function very closely related to the task that they've assigned themselves to this time. That's important. The second thing is that we like big deposits. Everything that can go wrong with a big mine can go wrong with a small mine, but a small mine can only make you small money. And so we look for areas that have the potential to host very large deposits that are being explored by people who have been successful in precisely the same activity in the past. It cuts down the number of companies that we have to look at by 90%.
So number one thing is the proven ability by management. They're tested, they've done it before, and that's what you look for primarily.
Absolutely, positively. You had the pleasure today of sitting into part of Robert Friedland's talk. This guy has been serially successful.
Right.
He is just anomalously successful. He hires very, very, very good people, and he's not afraid to go to South Africa, because if you're looking for platinum, you go to South Africa. He's not afraid to go to Congo, because if you're looking for copper, you go to Congo. It's no mistake that Robert has made 5 major discoveries in his life, which is 5 more than most people get. You look across the aisle in the exhibit hall and you see the Lundin Group. The Lundins have been responsible for 11 major discoveries in my lifetime. Why on earth would I invest money with a, pardon my saying so, a nothing nowhere entrepreneur when I have the opportunity to invest alongside legends that have been serially successful?
Now, so you have people first and assets second. Are there any commodities in terms of investing in some of these companies that are more appealing to you right now?
Well, right now, of course, because people hate them. The uranium business is very, very, very attractive to me. People despise it. The met coal business people despise. The zinc business people despise. And unusually, there's a cheap precious metal, finally. We think that platinum and palladium is anomalously cheap. And we think it's anomalous not merely because of its status as a precious metal, but more, as Robert said today, because it's absolutely critical to the air quality that we would all aspire to on an ongoing basis. Demand is assured and increasing, and supplies are falling at this price point. When demand increases and supplies fall, something interesting happens to price.
Right. Absolutely. Now, I'm curious to know, have you ever looked at an investment opportunity and then walked away from it for a particular reason, what that might be?
Oh, many, many, many times, sometimes to my chagrin. Sometimes despite the fact that I pride myself on being willing to take considered risks, Risks have seemed to me too extreme at the time, perhaps as a consequence of failures in other investments.
Right.
Mostly when I walk away from a speculative stock, it's because the management team associated with it are either unproven or are known failures.
Right.
So the first thing that'll turn me away, the thing that turns me away from 99 out of 100 investments that we're presented with at Sprott, has to do with people.
Right, absolutely. Now, management circulars are a wealth of information. Is that where you direct people to go? You know, what kinds of things should people be looking for? What kinds of questions should people be asking at a show like this?
That's a great question. The Management Information Circular is a wonderful place to start. You come to a show like this to find a story that you have an affinity to, one that moves you enough that you're willing to do 5 or 6 hours worth of due diligence before you invest money. And I'm not talking about Sprott. We do more like 50 hours of due diligence. But a living, breathing human being should devote 5 hours to researching a company before he or she buys stock, and they should be willing to commit to doing an hour a month to manage their positions. The Management Information Circular, which you talk about, is invaluable. The proxy is invaluable. The quarterly financial statements are invaluable. Go on CDAR or Edgar, depending on whether the stock that you're buying is Canadian or American. Not all of the information that you need to know, but 99% of what you need to know is there. And importantly, Vanessa, you're competing with investors who don't do that.
Right.
You are competing with people that don't show up for the race. You won't get it right every time, but you'll get it more right than people who don't try well.
Now, moving over, I'd like to talk a little bit about the concept of leverage. What are your thoughts on leverage in terms of, how mining companies might use it, how investors use it?
By leverage, are you talking about leverage of the commodity price, or are you talking about financial leverage, borrowing money?
There's different aspects of it. I guess there's using margin or trading on margin. Is that something that you use as an investor?
No, I don't. I use margin to establish a short position, which I do a fair bit of, and technically I guess I'm on margin if I sell puts and calls. In volatile markets, we're not in a volatile market, but in volatile markets I love to sell puts and calls and monetize volatility. In the natural resource space, Sprott is a rather large lender, so it would be disingenuous of me to say that mining companies shouldn't use leverage when I'm a lender. Mm-hmm. One needs to look at the whole matrix of capital available to a mining company to determine whether debt is cheaper than equity and what the risks associated with adding debt are.
Right.
It's important for companies to understand their total cost of capital, and to understand their total cost of capital with the risk of employing that capital. At Sprott, if we lend a company money and they don't pay us back, their property becomes our property. That's not something that we set out to do, but it's different than having an equity holder. Mm-hmm. Very different. Higher risk, often lower cost of capital.
Mm-hmm. Now, you're advocating investing in this sector while it's still a bear market. What's the risk for investors of being diluted over the long term, and how does an investor mitigate that risk?
Well, time, I guess, is your principal risk, and one of my principal investment failings, personally, is that I'm a very linear thinker. I think if A is true, B is true, C is true, D is true, and E is true, that F is the outcome. Right. And I often confuse two words in English, inevitable with imminent. Okay. And so that has been a common investment failing of mine. What I have found is that all the better investors I know in this sector, Pierre Lassonde, Ned Goodman, all share the same affliction. We're all linear and we're all early. What we do that I think has made us successful is that we tend to ask questions where the answer begins with when, not if. If you are 2 years early, it's better than being wrong. And when somebody says to me in the context of uranium, when will the uranium price improve? They're not saying, will the uranium price improve? So while I can be wrong in terms of time and have a cash cost of carry, I'm seldom wrong ultimately in terms of the investment, which is very helpful.
Are you excited about uranium again?
I am. It could easily take 2 or 3 years, but the truth is, Cameco, who knows something about uranium, has said that the industry's fully loaded cost of production is $70 a pound, including exploration expense. So you make the stuff for $70, you sell it for $30. You lose $40 a pound and try and make it up on volume. This is an industry that's cannibalizing its own capital. Right. People think, why would I invest in a business like that? Because if the uranium price doesn't go up, the lights go out. That's why.
Are you seeing any good uranium companies out there? I mean, it's a very small sector.
It's an extremely small sector, and good, of course, is a relative term. We own Cameco, which if somebody wants to be in the uranium business, they have to own. We own Uranium Participation Corp., which is a way of participating in uranium directly. We own Denison, who manages Uranium Participation Corp., among other things, and is run by our friends the Lundins. And we own Fission, which is one of the most exciting new discoveries in Canada in any commodity this decade.
Awesome.
And we're actively looking for others.
Right. Awesome. Well, thank you so much for joining us today, Rick. It was a pleasure having you back.
Pleasure, Vanessa. Thank you for the opportunity and the intelligent questions.